Hi there, welcome to Trader. What we are going to be looking at in the first part of this video is my template that I use to trade the market daily, and that is Nick Trade's Aggregated Order Book. Okay, so let's jump into the console. Right, okay, so a couple of things. If you want to load this template up, you can either browse for it. So if you go option, share with others, and then within there browse and search Nick Trades, and you'll see it's Aggregated Order Book, that's the one it's called. It's also shared on some of these social sites as well, Telegram and Discord. If you search for it in there or message me, I can share it via there. Okay, a couple of other things to note on this template when you load it up. I would recommend, if you were preparing to tweak anything, you've seen something and you want to tweak something, even if it's just aesthetically, you want to change colours, just go in the templates there and save indicator template, save as your own, call it something different, then you've got it. You don't have to keep loading it up every time. Another thing, when you do load this up, and if you're going to have a look at the indicators and what's involved in here, you'll see there's various bits, a couple of things. We've got some alert logs here that print on the overlay, and also if you look at this, you'll see there's a warning sign, for instance, spot top levels. Okay, warning sign. What each market is doing, each indicator is doing, is looking for its individual market. We're currently on BUSD perpetuals. Spot's basically saying I can't see anything. That's fine. It's the way we navigate through this by using the widget. If I flick to a spot market, okay, spot is now on, perpetuals now warning sign. Okay, it's the way we navigate. Okay, we'll look from spot to perps and then back, and you'll see that these change. Don't worry about that, that's just the way it is. Okay, it works well. So what have we got on here? Just flip back to perps for a second. Okay, so three main elements. We've got the OBD depth overlay, which is the, I consider the ultimate edge in the market. We've got our top levels, which are these lines here, and we've got a general order book depth at the bottom, which I'll go through lastly. Okay, so let's go through each element as they are. First of all, the order book depth overlay. Personally, for me, I only want to see the strongest print overlays on here. Okay, we'll go through the settings for that in a second quickly. What do I mean by the strongest? Okay, so we're on a perps market here, currently the 7th of February 2023. We've pushed up from under 20k. We're now kind of like just consolidating and ranging around that 23k level. Just to get a little bit of context, the BUSD market has been quite active at the minute. There's been a few things on social media about it. Won't go into details on that, but it's printing some quite nice overlays, so it's worth keeping an eye on at the minute and possibly in the future. So I want to see the strongest prints on the overlay. What do I mean by strong? If we look at perps, for instance, we consider a strong perps demand or ask. So a strong demand would be a positive 30 in the 1 to 2.5 and the 2.5 to 5, but mainly the 1% to 2.5%. That's going to be a strong print in there if we're getting over 30. Currently see that USDT is a 20, so they've got quite a bit of bid there. BUSD is a good example. Yesterday price came down, we started hitting some 30 double bands as well. When I say double bands, that means that it was printing an over 30 ratio in the 1 to 2.5 and also the 2.5 to 5% in here on this widget. Okay, and that prints in there. Similar with the ask or the supply, I only want to see the strongest, and it's the same again. I only want to print a negative 30 on that supply side, so that's all I want to see. We'll jump into the settings and have a look at why, and I can change that and show you in a second. Spot market, Coinbase is quite a nice example, to be honest. Here we go. So in the spot market, what do we consider strong? Supply and demand. In the spot market, that would be over 60 on the ratios. Okay, so positive 60 on the ratios in this area, the 1 through to the 5, we consider strong demand, as we can see here. Coinbase Pro at this time here on the 30th of Jan, as price fell down, these ratios on the widget, the order book depth widget, would have been printing 60 and 60, possibly over, because it looks very, very strong there. What happens? We get a reaction and we go up. Similarly, as we go up, we're printing now supply. So in this region, this was probably 2.5 to 5% region. Coinbase Pro at that time would have been a negative 60, so a minus 60, negative 60 in there. Okay. Couple of reasons I only want to see the strongest alerts, and what we'll do is we'll just have a quick look in settings for perpetuals. Okay, so here's the settings. I won't go into too much detail about the opacity cap and the styling, because DK from Trader has done a very, very good and thorough academy piece on that I highly recommend everyone needs to go through and read, to be honest. It's the first thing I did to learn about how each thing works. Really worth the time. Okay, so for me, on my overlays, on the perpetual overlays, I've got a 70 opacity cap, so it's pretty strong, and ratio minimum bids 30. Like I said, I only want it to print an overlay if the ratio bids is 30. I'm currently on a 15-minute chart, so you know this would be printing on a 15-minute closing candle. It's going to print an overlay. Similarly with the asks or the supply, 30 in there, that just means it's going to print a negative 30, okay, on the chart. That's all I want to see. I've got force market type on, and we're looking at perpetuals. Quick look at spot. Similarly on spot, 60 and 60, just like I mentioned. Force market type, spot, okay. Opacity cap a little bit stronger. Again, I won't go into too much detail, but reason for that is I just want a little bit of a stronger print, you know, highlighted basically on the overlay. So if we just come back to perpetuals for a second, what I'll do is I'll go to a market that's not as printing as many overlays at the minute, and I'll show you why we do that. Okay, so everyone's different, but for me, I only want the strongest. If I drop this down, for example, to something like 5, what you're going to find now is you're going to see all the demand, all the bid here coming. Click off that, and there you go. Now, that's quite nice. It shows us demand there. But is that going to move the market? No, probably not. Price can still come down and feed into it. So, you know, again, I just want the strongest, so I reduce that down. And it's a similar thing on the ask, the supply side. If I drop that down, you know, what you can see, higher up, these guys are waiting to sell. But is it going to reverse price immediately? No. Price could, you know, float up there and meet that. Same thing with the spot. Let's go to a spot market. Okay, you can drop this down just to see what it's doing. And there we go. So it looks very nice. Does it move price? You know, possibly not. Okay, let's cancel that off. Okay, so all the time we're looking at the print overlays on here. Okay, but keep an eye on the widget as well, because that's going to tell you exactly what it's printing. Anything over 30, strong bid. Anything negative 30, strong ask. Similarly with spot, 60 and over, strong bid. Negative 60, strong supply. Okay, right, let's move on a little bit. Look at the next element, which is top levels. A good example for this at the minute, which I've just seen, is again BUSD spot. So again, I only want to see the strongest and largest top levels here. So what do I have on? Here we've got our large bid limit orders, and here are our largest at this time ask limit orders. Okay, so one thing to note is we currently can't really tell unless you see this getting dropped in at the time. For instance, here on the 3rd of Feb, if you were looking, you know, you could look back on order book changes 4 days, and you know you'd have a look here, and as you can see, 22.1, 22.2, 22.3. That's your Bitcoin bid there. Okay, and that's this region here. So you can see what if you catch it at the time, you'll see it. If it's a lot older, you're not necessarily going to see how much this is for, but all you need to know is I've got the top 3 on. Let's have a quick look at that on spot while we're here. Okay, so for spot markets, force market type again, spot, price range 0 to 10%. I'm just looking at a 10% price range around the current price action, and I only want to see the top 3. Okay, again, like watching the overlay, if I change that, it's going to look a little bit more like a heat map. If I put the top 10 on, there you go, a little bit more heat map looking. Looks quite nice. Personal preference, you know, if you have that on or not. For me personally, I only want to see the largest orders that can possibly defend price, you know, from going higher up, or, you know, defend price from going any lower. Again, Coinbase Pro, nice example there. Level dropped in at 25k, supply on there as well. These guys at that time were saying you are not going any higher. Okay, if we look at the perpetuals market and the top levels, exactly the same. Okay, I've got the top 3 on. I only want to see the top 3. What you'll find is on the perpetuals market there is a lot more market making. Okay, so you're going to find a lot more levels dropping in and out. It is a lot more active in here. Okay, you've still got an edge if you see big levels coming in, starting to defend price. You know, you can watch what's going on. Is there an overlay on there, and react to that. But as I say, you will get a lot of market making, especially on some exchanges. You know, like USDT, you can see it dropped lines in. It doesn't, you know, and again, it doesn't mean these orders are particularly large. They are just the top 3 largest limit orders at that time. Let's have a quick look at BitMEX. Again, market making. Okay, so if we go to back to USDT, because it's quite a clean chart there at the moment, and we just have a look at the settings in there and flick that onto 10 again, you're going to get a little bit more of a heat map look. Okay, let's just close those and have a look. So yeah, it looks nice. It's, you know, it's quite good, but no, I believe there's no real, if you're day trading this, there's no particular edge in there. Okay, let's just flick that back. So that is your top levels. Again, I won't particularly go into too much on the styling and everything of those because it is in the academy, but needless to say, on the styling, I've just got, you know, my largest top levels, which is 1, 2, 3, just on thicker settings. That's all, just so I can see which is the largest, and it's purely an aesthetic. Okay, so next, what have we got? So next part of the template, if I just get it up, is the order book depth. Now this is an aggregation, spot and perpetuals. Okay, couple of reasons I have this separate to the overlay, which I can go over. But first of all, what are we looking at? I'm looking at a depth greater than or equal to 1 to 10%. Okay, so 10% price range. You can look beyond there, but for, you know, day trading or whatever, this is enough for me at the minute. Okay, and quote assets, I'm pretty much looking at everything, to be honest, and most markets. As you know, there's been a bit of a shift in which markets are doing the most volume, etc. You know, this can change over time. We used to have FTX in here, obviously that's gone now. Binance are currently still doing the highest volume. Huobi and OKX are doing some good volume as well, and possibly Bybit. I don't have Bybit on. I've just found it skews the data a little bit because they don't provide it all. That's the only reason. Okay, so that's that. Why do we look at that? Couple of reasons. So what I'm looking at on the actual overlay here in the 1 to 2.5% is basically, you know, I want that overlay to print and show me that that demand's there close to price, so 1 to 2.5% away from price. This can move a market potentially. Okay, but if we are moving down in the market, and you know, as you can see here, BUSD price is coming in, but the bid's coming in, should I say, and price is still trickling down, are we generally looking at the depth of all exchanges in the 1 to 10%? Are we generally in demand, or are we generally in supply? Okay, And good examples of this, again, here is the Coinbase Pro chart. And what we basically had is, so this is our supply area, white. Again, if you save this template, you can change the color, it's purely aesthetic. Okay, this is supply, this is demand. Okay, so very, very simple. Not the best price range here, but we can see we came from demand when we've cut through 20k in January of 2023. We're going up, floating up, blowing up. Demand's dwindling, and a little bit of supply is coming in. So what's happening here? Well, you could say that perpetuals markets are taking profit, possibly up in shorts, and on the spot side of things, you're hitting some supply. So you've probably got, you know, a few traders getting rid of a few coins after a 30% or so move up just in January alone. So we can see here as price moves up, what's happening? You're getting more supply coming in the market. Okay, and again, this is an aggregation. You're looking at all markets, 1 to 10%. All exchanges are in confluence. You're hitting supply. There's no more demand, as we can see. There's no overlay printing, for instance. What happens? Price reverses down. After price does reverse down, what do we start to do? We come down, we start to get demand in the 1 to 10% region of all exchanges. So all exchanges are in confluence. They're all, you know, starting to come back in, starting to bid. When we've had a drop from, you know, 24, let's say, you know, right down to 22, they're all exchanges starting to bid again. And Coinbase Pro is very bid. So Coinbase Pro at that time in the 1 through to the 5% range was on a 60 and a 60, possibly even a 70 in one of those. Okay, so depth overall on all exchanges. Yep, maybe close your shorts, start to think about going long. What happens? Price reverses, we come up, and we can see the depths building. Okay, we come back up and we start to hit supply. Not major, nothing major, because the overlays, you know, the overlays printing spot supply, but not all exchanges were in confluence. Okay, so that could have been some perps markets were still trying to chase up, you know, maybe a bit of FOMO, maybe perps markets were still trying to chase that up. I have to scroll back for another example. Again, from demand, come up, blast up, okay, and we're hitting supply, and then we consolidate and range for a while. So, you know, if you're long from down here, or the Bitcoin Diamond, which is, again, you know, just our alert logs that we print. I remember this at this time. So if you're long from that Bitcoin Diamond, which is a good long, come up, you range for a certain amount of hours, and then you blast up. I would say you need to consider your position when you start to see this, okay? Because you're starting to hit supply. You know, unless you really want to just sit in that long for a swing position or something. I mean, all that happens is you go sideways for a couple of days, eventually push up a tiny bit higher and come down. But you can see you're starting to hit supply, okay? Let's scroll back. Let's see if we can find, I think it was around the 13th. Yeah, here we go. Okay, nice example here. I'll just stick on Coinbase Pro for a second. But this was an example where we've come from demand. Spot market was prepared to bid lower. We've come up. We've hit a little bit of supply there, but nothing too much. Come back down. Big top level. Find more demand, and we blast up. And then what happens again? If you're long from down here, for instance, and you're coming up, and then you're seeing this, you start to meet supply. What's happening? Basically, all exchanges are basically in confluence. They're saying, we're not prepared to bid this up anymore. Okay, you come into exhaustion. We're not prepared to push price up anymore. You're in supply now. Okay, so you need to be cautious. Subsequently, what happened? We actually got a sell alert, which is our alert log here. BTC Diamond. Okay, and that was a good short. Back down. Come to find demand, and it's seen here. So demand grows, as we can see there. Okay, Let's see if I can, if there was another exchange that I could look at that was quite good. I believe there was. I think it was Binance. There you go. Good example of top levels moving down to meet price. You've got an overlay print. So we're on the Binance USDT. You've got an overlay print in the 1 to 2.5. So they're selling. You've also got a top level. And then you've also got a Bitcoin diamond to say short, or at least, at the very least, close your long positions there. Okay, come back down again, start to meet demand, and that'll be the same case on perps as well. Here we go, perps, you know, even looks nicer. Okay, so you can see perps, this is basically guys either taking profit or starting to short, and the overlay print there is really nice on perps. So tight risk on there, coming up into supply, very nice short. And I actually remember this one as well because I believe it was Jerome Powell FOMC day, so a lot of volatility in the market. Needless to say, even if you were watching Bloomberg News or anything like that and you were seeing this and this, the top levels, the overlay, you're in supply, you know, that was a take profit on your longs, or at the very least, you know, start to consider a short. So yeah, okay, let's flip back. So that is basically all elements and how they are working together. In the next part, we'll go over what I specifically look for potential entries on trades, what I'm looking for on the top levels, what I'm looking for on the overlay, and the depth in complements as well. Okay, cheers. Hey there, right, in this part of the video on the trader console, still on the Nick Trades aggregated order book, we are going to look at a few examples of, you know, potential entries that you could take on trades. We'll look at Bitcoin at first. We'll have a look at ETH. ETH's a very clean chart at the minute in the order books, and then we'll have a look at a couple of altcoins as well that could have had a scalp/day trades on. Okay, so we've had an overview of the aggregated order book. We know what everything means. We know what it does. We know what we're looking for. Potentially signs on the overlay and the top levels and the depth. We know we want to see demand in the depth. We know we want to see the 1 to 2.5% and the 5% possibly printing, you know, demand or printing supply. And, you know, if we've got a top level there as well, defending price, then, you know, all the better. Okay, so let's scroll across a little bit of a range here, I say. Beginning of February 2023, a little bit of a range after Bitcoin's had a, you know, really big move up in the market. Let's scroll through and find a few examples of, you know, potential, what could have been potential day trades and the like for Bitcoin. Here's one straight away. Typically what you would look for, you've come from supply, so we have been trending up lately. So if you were long from lower down over here, this might be a potential, just, you know, maybe just to take profit. You don't have to short this area. There's not, you know, there's not a lot major going on. Quite a nice one if you got it. But this is kind of like a better looking display of what I want to see. Reason being, you've come from supply. As you come down, you then start to meet that demand again. What's happening? We're on the perps market. You're starting to print an overlay, okay, in the 1 to 2.5%, and just to display again, so distance from price 1 to 2.5%. That's why it's displaying. And at that time in the perps market, it'll have been printing a 30 level, so there was good bid on perps. Also, you've got two top levels there. Okay, so someone's dropped in two top levels, waiting to fill or defend that area. What happens? Price reverses and goes back up. So looking at that, that's a really nice overlay for, you know, a day trading slash scalp along. What would I be looking at? Basically, if I was eyeing that to get in a long position, you know, if you catch the wick, that's great. If you catch that wick down, if not, say you're in from, you know, this sort of region, basically, you know, you want you want your stops below these top levels. Okay, so you're in at a price range of 22.6-ish, say. You know, if you're watching the charts, I'm on a 15-minute, you can zoom into a 5 if needed. Okay, and your stop placement wants to be kind of under these top levels. Okay, so 22,250-ish, something like that. And as we've just measured, what have you got there? You've got on a 2.5% risk. Okay, what's the reward? Well, everyone's different. Some people might scalp this and literally take it up, you know, to the top of this wick here and just get a 3% move. You know, personally, I like to hold trades a little bit longer as a day trade. You know, I'll hold them for a few hours to 24 hours or whatever. So for me personally, I might take it a little bit higher and just, you know, sit on that trade, get a stop loss in, let it consolidate, pop up, you know, and I might just take that extra few percent there. And then as you can see, price getting defended there. So yeah, you're eyeing to enter because it's nicely defended. You've got a 2% risk, and you know the amount of percentage you take off that long position, personal preference. Are you scalping, are you day trading, or you know, are you at some ultimate lows and you really want to, you know, swing this up? Okay, so what else to look for there? Confluence across exchanges. So we're currently on Perps USDT. That was the 30th of Jan. If we have a look at other markets and see what they are doing, scroll back. Yep, so BUSD was bid as well. Deribit's not a bad market actually to look at. Deribit, same bit of bid there, no real supply. BitMEX, you do get a lot of market making in BitMEX, so it's not the best and cleanest charts. Okay, but you know, a little bit there. That little alert there is actually a perps alert. Okay, they've got 3 exchanges in: Binance, BUSD, USDT, perps, and BitMEX on there. Okay, so it's signaling me that all 3 markets are a bid. But the best confluence with perps is spot, to be honest. Okay, and I know from trading this at the time. Here we are, 30th, wick down, Coinbase Pro, mega bid like we saw in the last video. So really good risk reward there. They haven't particularly got a massive top level under there, but seeing the other confluence from perps as well, you know, that's a good long trade. Good long trade. So nothing really on Binance. I mean, if you were looking at the time, they might have hit some bid ratios there, but nothing really to, you know, show you. And the same with BUSD. Okay, so that's a kind of nice long position. Let's have a look at ETH and see what ETH has provided in long positions before we look at shorts in a little while. ETH again, yep, demand on the OBD 1 to 10%. You know, even if you're just scalping this up, okay, good demand there, and that's spot demand as well on Binance USDT. Okay, so you know it's big volume there. Okay, few alerts going off, no top level, so yeah, I'd be a little bit cautious there because you've got nothing really defending price too much. You could have flicked to BUSD and taken, you know, see that, okay, it's mega bid, I've got no top level, who's there, who's defending price, you know, look through the other markets. You could have said, okay, USDT's bid, but no real top level. You know, if you were entering here, you could have gone, okay, you know, it's not a great risk reward this one because we are just ranging, but you know, something like that. And you'd want your stops under here, and we're still ranging now. This is your invalidation, really, something like that. Okay, let's scroll along because I think the ETH chart is printing very clean at the minute, or it has been all of this year. Okay, so I will say this first bit in the beginning of Feb, end of Jan, is quite consolidating and ranging, so you're just seeing a little battle going on between the supply and the demand to see who wants it more. This was a good one. Okay, long position, you've got various alerts going off, ETH diamond alerts and group spot alerts basically going off, telling you that things are bid. Okay, so price comes down, we're still in demand zone, so you know, maybe even if you didn't short that one, that was a take profit from lower, and this is your re-long here. Okay, and what we can see is spot USDT, which is really good, mega demand there, probably 60-70 region. Again, 1 to 2%, 2%, so 2% risk. And what you basically be looking at doing is using this top level here as your stop. So you're in around there, okay. 2.5%, say you could have it a little bit tighter, 2%, 2.5%. And again, the take profit is purely personal, but you could have got as much as 9.5ish% there, okay. What I would say is, yes, okay, you can look at this and say, right, well, we then came up and started to hit supply. Because it's such a big move up, that 9%, it can be a little bit reactionary, really. People just either closing trades, getting out positions. So it's always better if you come down, kind of like bounce, okay, bounce, bounce. Yeah, we are in demand. Nice top level go. Whereas you see here that the top level looked a bit weak, and the supply came in from probably perps closing longs, to be honest, as we rushed up. It's not the best. It's better to see it when it's smooth and nice like that. Tested, bounce, and then we go, and then we run like that. So that's a good one on ETH. Just to summarize, you want the overlay and the top level. I will say this: if you've ever got just purely a top level and no demand or supply on it, those top levels can get run through no matter how big they are. Not necessarily pulled, they won't necessarily get pulled, but if it's just one order, especially on spot, for instance, they can fill their order and then quite happily sit underwater on a bid side. Obviously, if they're selling, they could just sell spot and miss out on the rest of the move. Who knows? So here's another good example on ETH, and I'm showing ETH because the charts have been very, very clean at the moment. But again, we've come down from this supply up here, so 1 to 10%, all exchanges in supply. We've come from that supply up here. Okay, range. Okay, we need to send price lower. We send price lower, we then start to meet demand. So the 1 to 10%, all exchanges are then meeting demand. Okay, we'll have a look at some other exchanges in a second. So perps alerts saying firing off. Yep. And what we've actually got on spot USDT is what we call double bands. So spot at this time in the 1 through to the 5% was 60 and 60. High demand. I remember trading this one. And the ultimate good confirmation on this one, bit of a long one to stay in the trade all this time. Again, personal preference, do you just scalp it and get out? But we actually came down almost like a double bottom. We found that demand again, but that was just a 1 to 2.5% in here. Okay, and another alert, and we really bounced. I remember trading this one, and then waking up the next day. I'm an early riser. I was up at 6, 7 a.m. and then I remember seeing this, and I was out. Basically, that was the trade. So, if you're in from this region, 5%, it's a good day's work, basically. And again, entering in these positions, again, entry is key. You want to be in as tight as you can be, but that is your reward, and your risk is just below these top levels here. So 2 to 2.5%. Okay, and you're out. Now, as we saw in the last video, I think we showed this one, subsequently price came down, bounced, and then just started ranging again. But if ever I see something like this, whether it's ask side or if you just invert that, basically you don't want to mess with that. Was it a good short up there? Yeah, not bad. I think again, if you were short from in this kind of region here, click that off. If you were short in this kind of region here, you'd been looking at 2% risk. So yeah, very, very good. You could have hidden behind there, and then seeing that you're starting to bounce, you could have decided whether you wanted to take profit in here, or get out. But that's it. It was a little bit of a range. So yeah, that was a good one. It was it would have been a good short, at the very least, to take profit. I believe at that time I took profit. I didn't actually short this one because I acknowledged that we were just in a range. Let's scroll back a little bit. Another good one. But you would have had to. You've got a top level there and one here lower. this is quite a key one, because what happened on ETH here, we came down, we tested the area about 3 times. Okay, so we come down, tested, you've got double bands again on spot, bounced, test, you know, coming down, double bands again. You've got a slight top level there, slight one here, and a fat one there. So at that time, the risk wasn't amazing. You know, you could have sat under that one at 1.5%, but if you were going, you know, at 3-4%, not the best there really, but it did result in a good move. And the key thing here would have been to see it come over, consolidate range, hits more demand, okay, 2.5 to 5, 2.5 to 5, and you see here this top level actually moves up, okay. So then we hit some supply, probably reactionary, and again probably reactionary because we're moving fast up, okay. So that's some Ethereum trades. Similarly on here, what you'll find is as price moves quickly, this can be traded as closing positions, selling a bit of spot. So not always the best to short these reactionary quick moves up, okay. On Bitcoin, if we just go back to Bitcoin a second and we'll look back at that date on the 13th, this is a really nice example, obviously, because we've come from demand, we're trending up. What happens? Caution needed. The OBD 1 to 10% is in supply, okay. Volatility is in, top level supply 1 to 2.5%, and a Bitcoin diamond. So not only is spot selling, but on the Bitcoin diamond alert, you've also got perp selling as well. If I just flick to that and go back, okay, so you've got perp selling as well. So really, really good one, okay. Now you could have had your stop above 18.5 there for that top level there. So you've got a really, really tight risk reward. Let's have a look what it would have been on spot. Yeah, again 18.5, okay. So if you were short here in a very, very volatile market, very, I mean, even if you were, you know, a little bit late to the party, you still only had a 2% risk there on the short position, okay. So you know, you're trying to enter as best as possible, quick reactions into the market, okay. You know, I'd have hidden my stops behind there, you know, 1.5-2% risk maximum. And then as we've come down, there's no demand, come down, demand, okay. So I'd have probably been looking to take profit around there for a 7% as a day trader, because we did then roll over a little bit more, but you're not to know that. You know, I see it hitting demand, I'm happy. 7%, you know, it's massive percentages, okay, in the crypto market. So that's Bitcoin and ETH. I think Bitcoin for the rest of this time through December was quite boring, so what we'll do is we'll just have a look at a couple of alts. I know DOT prints very, very clean charts, very day trading, you know, or scalping, hitting supply at the minute. Very good example. Supply, demand, bounce, supply, no print in the overlay, but you know, the rest of the exchanges are pretty much in confluence saying, you know, this is your ceiling at the minute, okay. So yeah, a little bit of action, a little bit of a battle between buyers and sellers going on DOT. I would say the longs have been better at the moment on this asset because of just where we've come from, okay. So you know, 1st of February here, 2023, most charts have been smashed to bits and really capitulated, so the risk reward on longs is a lot better. This is a good one. You could have been long here, and this top level would have been your stop. Very boring if you were in that trade. I'm sure it would have been disappointing, but then you've come over, and this is you know, a better entry. So you could have entered, left it, but then on seeing this, so again, some people call this double bottom, you've just come back, you've just tested that area again, and what happens? You're off, okay. So really, really tight risk in here, and you had from, you know, 3:45 in the afternoon my time, you know, you had a good 2 2 or 3 hours to get in this trade. Even if you're in the middle of this small range here, your risk was still very, very tight, 2%, okay? And what you're looking at, again, you know, who knows, even if you're up there, you know, 8% trade. Bit of a battle, and we continue. You know, if you're holding it, maybe tighten your stop. Some people tighten the stop, some people just leave them where they are. But you know, you had a potential 15% trade there on the long. Okay, not sure if Dot has got many more. I've traded this one quite a bit. Yeah, I mean these are okay. These are longs. You get again, come top level in, tests it, bounces, tests it. You know, you potentially stopped out, but it did hold and it ran. Here's one where it fails. Now, obviously, because I can't see this at the time, I don't know if it's failed or it's been pulled, but I know that this was a very volatile time in Bitcoin as well, and there was a lot of assets that looked like this where they had the top levels, and we just ran through them. The only thing I will say is, if you were looking at this, okay, and you were potentially thinking, oh, you know, that's a nice top level, and we've got some demand there. Well, in actual fact, and it's not showing a lot, but the general order book in the 1 to 10% is actually in supply there. Okay, so it's better to have confluence across the exchanges as well and on the overall demand or supply, because as we were coming up there, actually, apart from one exchange putting in this bid, no one else was bidding this. Okay, whereas this one, okay, absolutely whacked price down. We've found double band, spot bid. See at the top there, major selling at the top. Okay, a bit of spike of selling. We've come down. We've got major demand here. Okay, double band ratios printing. We've got top levels in support, and off we go. And you could say that, you know, that wick was probably your best entry, but you know, if you were in anywhere around there, and again, you know, measure that, you know, probably a good 10% there. Okay, another one that has recently been quite nice for scalping. I think it was SHIB, actually. It was a good one. This was a weekend trade I took that I thought was very nice. Pure scalpy day trade. You know, price is getting supported here. Great. Could have taken that long. You'd have to have quite a tight stop because your top level's right down here, but then we push up, and it's almost like a resistance to support flip. And what we do is we come up, and you've got 3 major top levels. I remember watching this at the time. So 3 major top levels defending price. So again, you try and get in as best as possible, and what you're looking at there, you could probably put your stops in between there, so maybe 2.5 to 3%. And then if you're in, you know, you can ride this position until you hit supply. I remember trading this one at the time. I actually just put my stop in because it was the weekend, held it through to here, and then just saw that we weren't really, you know, I like to see continuation, I like to see a push up, and just saw that it was rolling over, so not the best. We'll do one more. What else are we looking at? Atom can be quite nice, hitting a bit of supply, but again, you do want to see those large top levels defending price. I think Link can be okay, but it's a little bit of a slow mover. Let's have another look at a really liquid coin. Yeah, something like this. ICP. No major top levels because there's probably no one major, you know, putting in good chunks of cash on it. Yeah, 36k, you know, nothing too major, but good areas of supply demand. Again, test. So, you know, if you were long in this, yep, get your stops below here. Some, you know, again, 2% or something, ride it up. You could, you know, these are a few alerts for the option. You get out there, comes back, tests the area, actually fails that time, and we come back down. Okay. And again, nice display of supply there. Okay, so all demand, coming up, still in demand, even though price is testing back down lower. Okay, demand, 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 overlays. You can long that, but there's no major top level, so I suggest you know you want to stop a little bit tighter. What happens? Start to hit supply, so you want to be cautious in your longs here. Really, it becomes you know, the decay on the trade becomes a bit more dangerous when you're seeing this major supply and it's printing overlays. So all exchanges are not interested in bidding this up, and you're seeing supply. Okay, again, no major top level. You know, you do have to keep an eye on this at the time, but that could have been a nice short down, and as you come down, not major supply, but you're starting to find bid and go from there. Okay, so yeah, that's it basically. That is what we are looking for. We like a nice overlay print with a top level. Okay, for defense, you can hide stops under there, and we you know, we like to see a nice reaction up. As I say, that was 7 p.m. at night to 10 o'clock at night. So again, you had another good couple of hours there, 2-3 hours where you could have got in, manage your position, and do we go? You know, the stronger the ratio is on top of the top level, the better. The thicker the top level is, the better. So yeah, good long, potentially good short, but at the very least, bounce. It was a take profit in there. Okay, so nice fat top levels with an overlay. That is your best risk to reward. And what we've seen is really what you want to see is the supply or the demand side as well, like we saw on those altcoins. Okay, cheers, thanks.